All right, very quick intraday market video this time. So S&P is testing that ascending support, looking bearish, very exciting stuff. So obviously it's stuck between this very tight pennant here, the descending line, the ascending line. The descending one is more credible, it's longer term. We've been talking about it for some time, but what I'm really looking for, I can delete this now because it's in the way, is a break of this line, which obviously the day is very young. So we still got 4 more hours left of trading, right? Yeah. Anything can happen, blah, blah, blah. I think we're going to close below it or maybe just above it. But, one more day would do it. Now, I don't want to jump ahead too much, but the Russell 2000 is already below it. Yesterday, we basically closed just above it. The Russell doesn't surprise me as one of the weaker ones on the way down, even though it's not down as much as the Nasdaq today, but the Nasdaq and the Russell 2000 are always the ones that will lead the way down. You would say up to, but actually the Dow's been beating it. Basically, the Russell and the Nasdaq are the weak ones in this bear market. Let's go back to the S&P. So we're hovering around the ascending line. Cannot wait to see where we close. It's the close that's always important. Remember, it does kind of matter what happens intraday, obviously, but the most important is the close. So let's see if we close below this line. This line is almost perfect, right? I'd really have to go in on maybe the 10-minute chart to really make sure the candles are ideal, but you don't want to get too cute. But anyway, that's what we have to look out for. The Nasdaq looks even shakier than the S&P. Obviously, it didn't rally as much, so it's weaker. It wouldn't surprise me if this did close below the line. I should really find out if there's any pending news. I don't think there's anything crazy today, news-wise. Tomorrow, I think the EU have some GDP reports. So there's news every day. So there's no point in trying to learn it by heart. But watch out for news that can maybe shift momentum a little bit. But I still think we're going down. I think we've had a beautiful move up in all these markets, especially the Dow. The Dow's been outrageous. I just couldn't believe it would go high when we were here. And that looks like it was kind of the top. In fact, that massive pump from Powell, which kind of caught me by surprise, was the high in the Dow. It was also almost the high. We went a little higher the next day, but basically that was the high. That was the fake out. That was the, hey, let's flush out the shorts with their own stop losses. Anyway, on the way down now, I'm looking for the Dow because we've obviously gone way beyond this ascending line and breaking out. It's a little different. I mean, I'm looking for sort of a test of 33,300. I've been over this. This is why the targets are already there. And then we go lower. The targets are all correct, in my opinion. The Russell 2000, like I said, is the weaker one. We basically open pretty much on or just below this ascending line. And I'll tell you what, if we close below this candle here, if we close below, call it 180. Call it 180, especially 180. If we close below 180, it's done. Put a fork in it. We go straight down to here where I've indicated it. I should put a target. It's obvious. It's where these are. 174. Let's see. Let's not get too excited. I'm very excited because I've sold this move up. It really does remind me of this move up all the way here. If I take the SPY, I sold it twice. I mean, I trimmed a little bit on the way up, but I was really getting aggressive here. Then when it kept on going, I sold here. I thought, that's it, we're done. And then again, you got that little move higher, which sort of fakes everyone out because everyone's looking at the same trend lines, or at least they should be, because they work, right? Charts are increased probability. And then bam, we go down. And here, I feel like it's the same thing. I was selling it, and then that little move higher scared me, especially with the Dow acting abnormally here, normally, and I sold here, the equivalent of here in the other markets, in the GDXs, for example, and then that little move higher, and then bam, down. So, I mean, it's still very early to say it's going all the way down, but I think it's going all the way down. The VIX is bouncing from this support. Now, I thought it would bounce from here, but, same thing. It's gone an extra level, and markets tend to do that. They tend to overreact on the way up and on the way down. So yeah, they overreact. So those are the markets. Let's move on to yields very quickly. The 1 year, I did say, has the tendency to be able to just pump any moment. And, look at that. Today, at some point, we were basically testing the high, 4.82 something, which is pretty impressive. And I did say the 1 year is a standout compared to the others. I think we've got a yield inversion to new records here. So, the short term are really going up high, and the longer term is sort of not going up as much. So normally it's the other way around, in normal times. But Yeah, 1 year testing the highs, very high interest rates. The 2 year weaker, right, substantially. The 2 year to me is the most important. The 2 year and the 10 year, that's the real inversion. But yeah, it's kind of reaching resistance a little bit. I mean, we did break down this head and shoulders, so you can't expect it to just go all the way back up, no matter what the 1 year does. So I'd expect a bit more resistance, a little higher if it does even get there. 5 year, a lot weaker. Here you can see and again, resistance where we are, in my opinion. And if it goes higher, more resistance just below 4. The 10 year, same thing. You'd expect resistance 3.8-ish, but let's see. Maybe the 1 year just drags everyone up. If the 1 year starts to make new highs, you can't imagine these longer dated yields just sort of hovering down. I do think that ascending support is like a magnet, but to be honest, I checked the 30. We're basically there. I mean, we were there a few days ago, but we've been hovering there. So what if the 30 gets a bit of forms a bit of a support and then breaks out of this and starts to move back up with the 1 year making new highs? Markets go down, yields go back up, you know? So watch out for the yields basing. I'll call it basing, and that could equal the 1 year going higher to new highs, the others going sideways and then going higher with a small delay. That's something I'm considering here. Let's check out the dollar. This is, yeah, so obviously we've come down 105, flush just below it. But now with markets going down, yields possibly going up, I don't expect it. I was thinking we would go lower with yields, but now I'm going to change my mind a little bit. I think, yeah, I don't think we can just go up like that. I think we're going to base, so we might have a little sideways action up and down, nothing too crazy. I looked at the major currencies that impact the DXY. To be honest, the euro dollar yesterday, and I didn't do a video yesterday, I would have mentioned it though, touched this small resistance where this target is 106. My next and final target was 107, 108. I don't think we're going to get there. I mean, first of all, we've got this ascending climb. That's one of the weakest types of moves. I mean, they got no choice but to climb anyway. But we've come out of a breakout. This is the strongest for me, strongest type of move. And look at that. That was pretty violent. That's nice. We've had a nice move in the markets in these currencies versus the dollar. But I feel like we've touched the peak. And I think we might just drop a little bit and then drop. So for euro dollar, may have hit its resistance. Japanese yen, same thing. It may have hit its low, and I say low because it's US dollar versus Japanese yen. So we have a decent look at this engulfing reversal candle here off 134. I thought we might get to 132, but we're very close to have achieved that. So we could just drift a little lower one more time, but I don't think we're going to take it out. Let's see. I mean, things can change. We've got to see some descending lines. There might be one here. Yeah, that looks pretty close. But let's see, we could have a bit of resistance, come back down again, double bottom, a higher low, breakout, move higher. So, and finally, the pound, a bit like the euro US dollar, we hit sort of resistance, popped above it a little bit, but basically not much. I don't think we're going to hit this 126. We've had a crazy move. The pound's had a crazy move from its low, and it's time to get back to reality because all these so-called spending cuts and all that in Britain, I don't believe it. Not at all. They're always going. I mean, every government, none of them are going to balance any budget. So let's see. We might drift sideways and then lose this ascending support, and back down we go. So for me, a little bit more sideways action overall on the dollar. We could come back down a little bit, but I think we might come back up soon. That with rates. So I'm not trying to do all sides here. I just feel like we're going to go sideways a little bit and break out. So I just don't think I'm going to go as low as I recently thought. But who cares about all that? We're trading the markets, not currencies per se. Even though I'm in commodities, I'm in commodity stocks. So let's move on to commodities. I'll do gold and silver. Gold and silver. So gold looks like 1800 was its peak. I know we popped a little bit above that. That's typical. 1809, right on the dot with this one here. But yeah, bam, violent move down yesterday. I loved it. Absolutely loved yesterday. That's what I wanted to see. A 2% down day in the general markets, S&P, NASDAQ. Everyone just, it's like being thrown into the Pacific Ocean, a little wake up call. Like, what are you guys doing buying stocks all the way up here? Back to reality. Gold and silver. I mean, obviously, I'm on a huge bull long term. It's just I believe they're going to come down with the markets, and that type of action yesterday was proof that that thesis is still in play. Today we tried to bounce a little bit. Now, obviously, it's intraday; anything can happen. But we've come back down. To me, it wants to go lower. Yeah, I mean, it came back down quite a lot yesterday. I don't expect us to go red, despite what silver's doing. But I do expect us to come back down to 1740. And then it will probably look like a left shoulder head, and then maybe a small right bump and back down, head and shoulders back down. I would love that. Let's see. It kind of depends. I do still think markets down, gold and silver down. I think a big down move in everything. We need one of those everything red days again. And I'm looking forward to that because I sold a lot of miners. Silver had a crazy down day yesterday, one of those 3%. And silver and gold basically were back down to support yesterday. I mean, a move like this, kind of in the support range of where we were last high. If you look at silver, same sort of thing, last high. So, I think we might go a little sideways, a bit like the currencies, but down straight after. And then we'll find more support here, but I'm looking for another down move after that. And I think if you trimmed your miners, or let's say the metals, and then they come back down and then they come back down again, I mean, you've really saved yourself a lot by selling and buying back. So that's the key. Let's go to the miners. So yeah, they came back down yesterday. Yesterday was a horrible day for the markets, so they came back down. Plus, the metals were down, so it's obvious the miners would be down. Today, a little bit green, which is impressive if you think about it, because the markets are down and the commodities are not exactly up strong, right? They're basically unchanged. Look at that. This is intraday again. And I mean, you'd expect these to be unchanged or red. I mean, think about it. The S&P is down 1% roughly, or even more. So you'd expect these to be red, but they're not. So for me, there's strength here. But again, they will get dragged and just, taken to the bottom of the ocean. Ultimately, not the bottom, but, they'll be taken underwater because if the markets are red and the metals go red with the markets, the miners have to go red, no matter how much underlying strength there might be. I also think there are black swans all over the place, so we could even have an extra surprise catalyst to the downside. But point is, GDX, GDXJ are slightly impressive today, but my thesis remains unchanged. Down we go to this ascending line, and then ultimately lower. But it's nice to see them green too, because deep down, I appreciate the miners, and I am a bull, so it's nice to see too. But yeah, that's GDX, GDXJ, basically exactly the same thing. Let's see where the markets close. I don't know if I'll be able to do another video. That's why I want to keep this one short in case I can do a video. Yeah, that's it. Good luck. Watch out for Credit Suisse. I gotta always say that. And watch out for that Bank of International Settlements 80 trillion black hole. That was a bit alarming. So black swans all over the place. Otherwise, trade the charts. Don't read into anything too much. Good luck until the next video.